All right, Brew Crew, welcome back to another episode of the Trade Retrospective. I wanted to talk about Netflix today. I just want to go over the details of that trade that began back on Wednesday, where we started off with call ratios, then made a series of adjustments before finally closing out the entire trade for a slight winner on Friday. Hang on tight because it's going to be a wild ride. All right, on Wednesday, our room gave the heads up that Netflix was going insane. At around 7:20 a.m., the chart looked like this. And when I saw the chart, I liked it. I liked the move up. I liked how the volatility juiced up the premiums in the calls. And honestly, the internals looked a bit weak. NASDAQ was just going sideways. Ticks looked weak. The breadth was also pretty neutral. So I was thinking, okay, we should take advantage of this move up in Netflix while the premiums in the calls were still elevated and look to target Netflix somewhere around 535 to the upside with some call ratios. Why 535? Well, switching back to the daily chart, the 618 retracement of this entire move was right around 535, and it might take the stock a couple of days to work its way up there. And if it gets there by late Thursday, then a wide call ratio should expand nicely. So let's go decently wide with the ratio, give it a good 15 points, and look for Netflix to crawl up to that area over the remainder of the week. So we got two of the 535, 550, 1/2 call ratios, and to alleviate margin, we bought some garbage calls up at 630. For illustration purposes, I won't show the garbage calls. It has no bearing on the trade whatsoever other than alleviating margins. So this whole structure, including the garbage calls, costed an 8-cent debit per spread, okay? Now back to the action. Shortly after entry, this happens. Netflix lurches higher, and within an hour at around 8:40 a.m. Pacific time, Netflix starts trading very close to the 535 call. Bear in mind that this was an additional 20-point move from where we entered in an hour. Given how explosive the move up was, the short 550 calls actually rose in value very quickly because of volatility expansion, so the call ratios actually contracted against me. Remember in my previous video where I broke down the Apple call ratio trade, I mentioned that when you get into these call ratios initially, you almost want the stock to move either down, sideways, or slowly upwards, but not rocket upwards. Well, here we have exactly the opposite. We get to see what we don't want to see. So Netflix shot up and the spread started to really contract and go against me. Even though the long call rose in value from about $2.50 to $10, the short calls also rose in value very quickly from $1 to about $5. At this point, I was thinking, okay, given the momentum and how early on it was in the session and how it was only a Wednesday, just to be on the safe side, we should adjust our position by increasing our deltas, and to do so, we can look to roll the 535 long calls down to 530 by buying the 530, 535 call verticals, which at the time was going for about $1.95. This way, we can bring our long call lower and hence our downside break even a bit lower. And if Netflix just hangs out sideways above 535, then we can collect some premium as those long verticals expand in value. At the same time, we increase the width of the ratio from 15 points to 20 points wide, and with the stock moving so much, we would need a bit of a wider zone to work with anyway. So we coughed up the debit and made the adjustment for $1.95 per spread, and we were happy since Netflix hadn't touched the short call yet, and maybe it would start to chill out here. So the total debit so far at this point is 8 cents plus 8 cents plus $1.95 plus $1.95, or a total of $4.06, which isn't bad when the maximum potential value of these call ratios could be up to $40 total. But what happens next? Well, Netflix continues its charge higher, and things were starting to look dicey again. And we're just like, oh man, should we go to the prayer room? No, not yet. Let's adjust in case the momentum continues. And then afterwards, we can go to the prayer room. But yeah, given how sharp up this move was and how it was only Wednesday, even though we're not at the short strikes yet, we thought it's better to adjust just a tiny bit and give ourselves the upside buffer we need, especially since we pretty much blew past the 618 retracement. I actually thought this thing had its eyes on the all-time high by the end of the week, and I'd rather be prepared for it earlier than later. So came the next adjustment. At 10:17 a.m., we bought a 550, 560 call vertical for $2.88, and then about 8 minutes later, at around 10:25 a.m., I bought another one for $3.21. The goal was to just push our upside break even further up should the momentum be extrapolated into the next day. So now our structure became long 2 of the 530 calls, short 2 of the 550 calls, and short 2 of the 560 calls, and we spent a total of $4.06 plus $2.88 plus $3.21, or $10.15. And now the upside break even of each of these structures is a maximum value of the 530-550 call vertical, which is $20, added on to the 560 short call, which is $580. But because we have a debit on this trade, we've actually shrunk the upside break even down by the debit, which per spread is $10.15 divided by 2, or around $5, which means the upside break even is 580 minus 5, or 575, which actually lines up with the all-time high. So after that adjustment was made, I felt safer. Now, while we're talking about the upside break even, we might as well calculate the downside break even, which would be if the entire spread goes to 0, and that happens if Netflix expires below the long strike at 530, right? But remember, since we paid a $5 debit per spread, that break even gets pulled up to 530 plus 5, or 535. Now, stepping through the rest of the day, Netflix decided it finally wanted to chill out and rest up here near 550, and just from it chilling out between 10:30 a.m. to 1 p.m. Pacific, all of the sideways action expanded the spread a bit as the premiums began to drain from the short calls. So that was our Wednesday, a pretty crazy way to start off day one of the trade. Now Thursday comes along and the stock does nothing but move sideways and dribbles lower. Shortly after the open, I began to think about Netflix retracing a lot of this move up, and if it did, because I was sitting on a pretty large debit, I needed to protect the downside, and I could either do that by buying puts, which I don't want to do at all. I don't want to add more debit to the trade at all. Or I could look to get back some credit. Just to get an idea of how deep Netflix could retrace, I threw on a fib and noted that halfback of Wednesday's move would be as low as 520, which is far below our downside break even at 535. So at that moment, I thought that if Netflix were to move sideways or dribble lower down to halfback, then I really need to do my best to begin taking back as much credit as I can get. Hence came the next series of adjustments. I began to roll down the 560 calls, basically rolling them back down from yesterday's adjustment up by selling the 550, 560 call verticals. The first one I got off at around $1.59, and the second one I got off a bit later for $1.18. And I got both of these adjustments in around 7:20 a.m. Pacific. Now, the current structure became 2 of the 530-550 1/2 call ratios. Later at around 8:46 a.m., when it looked like Netflix would be struggling to make a move higher, I decided in order to reduce debit risk, I could just take off one of the ratios, which was still going for a decent credit, for about $4.02. So I did that. In hindsight, that was the right play, as Netflix traded pretty weak into the rest of the session. When it broke the 38% retracement level, I also rolled the 550 calls down to 545 and took in an additional 36 cents of credit per vertical, which brings in a total of 72 cents more credit. After all of this, I was left with just one 530-545 1/2 call ratio. The total debit on this trade now sits at $2.64, and by the end of Thursday, Netflix was sitting just 5 points below the long call of the remaining ratio. Because of how close the long call was to where Netflix closed, there was a chance, with the extrinsic value remaining, for the spread to retain its value and for it to be taken off for at least $2.64 the next day, especially if Netflix trades higher towards a long strike early on. With an ATR of around 15 points, Netflix can absolutely trade up to 530 as long as it doesn't gap down hard. And that was a risk that I was willing to take overnight. So Friday comes along and Netflix shoots up to 538 right at the open. And while this meant that the 530 calls were nicely in the money, the move up was just a bit too hard, too fast, and too early, which unfortunately juiced up the 545 calls a bit. So I sat and I waited for some of that premium to drain as I was trying to see if I could close this ratio out for about a $5 credit. Now, as I watched how Netflix traded, I wasn't really a fan of how it crossed back below the low of the day at 641. At the time, the spread was still trading for a little under $3. So I decided I'll just set a limit order to flatten my position for $3 of credit and just get out of this entire trade with a scratch. And within the next minute or so, I got filled as Netflix bounced right back up. So all in all, the total P&L for the trade after adjustments turns out to be a whopping $36 and adjusted for commissions, roughly $20. Now, if you're still with me, I hope you don't have a headache by now. And if you hate me because it was so complex, you're absolutely right. In the moment though, I had to do what I did. Now in hindsight, I could have adjusted in a much simpler way. Here's how. Instead of making all the adjustments that I did on Wednesday, where I rolled things up and down on both the long and short calls, I could have just capped off upside risk by buying the 565 call to turn the ratio into a balanced butterfly. And that would have been it for Wednesday. Had I done that, then come Thursday, I would have subsequently sold those calls back out to get back some credit. Then found a way to reduce the debit even more on the last day, which I think would have been easier to do as the premiums were still pretty juiced up. So that alone right there was one of the lessons learned, is that when the ratio is contracting too much against me right off the bat, just keep it simple and cap off the upside risk by turning it into a balanced butterfly. The second lesson here, and I think more important, is to not step in front of something that is shooting up, even if it looks like it's taking a break, until you have a strong signal that it's cooling off and done for the rest of the day. I think I jumped the gun too early on Netflix, and had I waited for a sharper pullback, I would have been able to instead position the ratio in a much safer spot that wouldn't have required as many adjustments. Does that mean I might not be able to find a good ratio to play by the time I wait for the sharp pullback, since the premiums may not be as juicy anymore? Possibly. But I'll be okay with that because not having a position is a position. And I know the question that's going to come up a lot is, why not play the momentum by simply buying calls or call verticals? Why make it so complicated? Is it even worth the trouble of being uptight about the debit? And to be fair, maybe I could have started off with a vertical and see how that plays out first, but I would definitely still look to reduce that debit throughout the week because that's just my style. I'm okay with watching the markets like a hawk and adjusting, but again, this is my style. It's definitely not simple and it's probably not for everyone. All right, so that'll do it for this trade retro. I hope it was somewhat helpful for you to see how I approached this trade, how I went about repairing it when it was going against me to the upside where there was unlimited risk, and the adjustments that I made on the fly to reduce that risk, and how to subsequently harvest the cost of the adjustments back over the duration of the trade to make sure that the loss on the trade is as minimal as possible, and continue to do whatever it takes to be able to get out of the entire trade with a scratch or slight win. As always, if you have any questions or comments, feel free to leave them down below, and feel free to join us by checking out the links to our Twitter, Discord, and Twitch down in the description below. It's all free. We share our thoughts and trades and setups, entries, exits, all of that good stuff, all of that good commentary and good vibes. But for now, stay safe, Brew Crew, and we'll catch you in the next video. Cheers.